Hey everyone, did you see yesterday's market action? Gold dropped $140 in a single day. Meanwhile, Brent crude pushed past $101 a barrel. If you're sitting there holding gold right now, or you've been staring at your screen trying to decide whether to jump in, I get it. It's nerve-wracking. Gold dropped over 1% yesterday and sliced right through the $5,100 level. I know what a lot of you are thinking right now. The dollar just hit a new yearly high, oil broke $100, rate cut hopes look dead, and it feels like the whole gold rally is falling apart. But here's the thing. If you're feeling panicked right now, this is exactly the video you need to watch. Because what I'm about to tell you goes completely against what 90% of people in the market are saying right now. This drop is not a crash. It's the last big shakeout before gold makes its real move. Everything you're seeing right now, the strong dollar, oil above $100, rate cut expectations disappearing, it all sounds terrible on the surface. But when you step back and look at the whole picture, these are actually the ingredients for an enormous bull run. Today, I want to walk you through everything that happened in the last 24 hours and help you understand four key things. Why the dollar hitting new highs might actually mean it's almost out of gas. Why oil at $100 has basically trapped the Federal Reserve. Why Iran's supreme leader's first public statement really means for markets. And why Trump is celebrating high oil prices while at the same time begging the Fed to cut rates. Once you connect all these dots, you'll understand why I'm not worried at all. In fact, I think the gold bull market is just getting started. Let's look at the chart first. Before anything else, let's just take a calm, clear-headed look at what the gold chart is actually telling us. Yes, a $140 single-day drop looks scary. I won't sugarcoat that. But zoom out a little and you'll see that gold is still trading inside the same broad range it's been in, between $5,000 and $5,200. The overall structure hasn't broken down. There's no need to hit the panic button just yet. What's actually more interesting is what happened after gold dipped below $5,100 yesterday. It didn't keep falling. Instead, buyers stepped in hard and fast at the lows. And by the time I sat down to record this, gold had already climbed back above $5,100. That kind of bounce matters. It tells you that there's serious money willing to buy this dip. If gold can hold $5,100 from here, the bulls have a real chance to regroup and push toward $5,200. And if that breaks, we're looking at $5,300, maybe even back toward last week's high of $5,400. Now, to be fair, nothing is guaranteed in markets. If gold loses $5,100 and starts heading lower, then $5,000 is the line in the sand. That level isn't just a round number, it's where the whole gold bull case either holds or breaks. Unless we close clearly below $5,000 and stay there, all this volatility is just noise. It's big money shaking out the weak hands before the next leg up. The dollar looks strong, but is it really? I know the dollar scared a lot of people yesterday. It rose 2 days in a row and hit a new yearly high, getting up to 99.74. Now, it's true, when the dollar goes up, gold usually goes down. That's just how it works. So yesterday's gold drop made total sense, nothing unusual there. But let's think about why the dollar is actually rallying. The story is that Middle East tensions are pushing investors into safe haven assets, and the dollar is the world's safe haven. That sounds reasonable on the surface. Except, think about this. The dollar belongs to America, and what is America doing right now? It's fighting a war. In just the first 6 days of military action against Iran, the US spent over $11 billion, and that doesn't even count the damage to military bases across the Middle East. On top of that, they're getting ready to ask Congress for a war budget that could hit $50 billion. Wars are expensive. That money comes from the Treasury. Eventually, a lot of it gets printed. So how does a country running massive war deficits end up with a stronger currency? It doesn't, at least not for long. That's a serious contradiction. And look at the chart. The dollar is sitting right below 100, a level it has tried and failed to break through multiple times over the past 2 years. It's like a ceiling that just won't give way. I'd actually say buying the dollar up here is one of the riskiest trades you can make right now. The moment it gets rejected at 100 and starts falling, gold is going to spring back hard. Oil at $100, and why that actually helps gold. Brent crude closed above $101 yesterday. That's the first time it's closed above $100 since August 2022. WTI even spiked more than 10% during the session. Wild stuff. The spark was Iran. The country's new supreme leader came out with his first official public statement since taking power, and he didn't hold back. He said Iran will keep the Strait of Hormuz blocked and is ready to open new military fronts if needed. He also called on neighboring countries to shut down U.S. military bases on their soil. Strong words. But that wasn't even the most alarming part. Later the same day, an Iranian diplomat came out and added something that sent a chill through the markets. He said Iran would allow ships from some countries to pass through the strait, but any country involved in military action against Iran loses that right. No safe passage. Let that sink in. Iran is basically saying we control who gets through, and American ships, Israeli ships, British ships, you're not getting through. Now think about what flows through that strait every single day. Before all this started, it was around 20 million barrels of oil. Because of the disruptions, Gulf countries have already cut output by at least 10 million barrels a day. The International Energy Agency called it the biggest supply disruption in oil market history. The IEA even made an emergency decision to release 400 million barrels from strategic reserves to calm things down. Didn't work. Oil kept going up. Why? Because the problem isn't the amount of oil sitting in storage. The problem is that you can't physically move it through the strait. It doesn't matter how much oil you have if it's stuck in a warehouse. This is what traders call a supply chain disruption. And in that environment, $100 a barrel might actually be the floor, not the ceiling. The Fed is completely stuck. Now I know what some of you are thinking. If oil is high, inflation goes up. If inflation goes up, the Fed can't cut rates. And if the Fed can't cut rates, why would gold go up? That's exactly the logic most people are using right now, and it's why gold sold off yesterday. CME data shows traders have basically given up on a September rate cut. Some are pushing their forecasts all the way out to 2027. Looks bad for gold, right? But here's the blind spot everyone is missing. What actually happens if oil stays above $100 for months? Trump himself answered that question yesterday on social media. He literally bragged about it, saying America is the world's biggest oil producer and that rising oil prices mean that US makes a lot of money. He's not wrong about energy companies. They're printing money right now. Shale producers are having a day. But here's the other side of that coin. Regular Americans have to put gas in their cars. They have to buy groceries. When oil prices go up, everything gets more expensive. And once inflation really gets going, a few interest rate moves aren't going to fix it. So what does Trump do? He knows he can't let inflation spiral out of control. That's political suicide. So while he brags about energy profits, he's also quietly preparing to waive the Jones Act. That's the U.S. law that requires ships operating between American ports to be American-built and American crude. Normally, it protects the domestic shipping industry, but right now it's slowing down fuel distribution. Waiving it is an emergency move. It shows the White House is more worried about fuel prices than it's letting on. And then Trump went further. He publicly called out Fed Chair Powell again and demanded he cut rates immediately, not at the next scheduled meeting, right now. Think about what that means. At the exact moment inflation is running hot and markets think rate cuts are dead, the President of the United States is publicly pressuring the Fed to cut anyway. That's not just political theater, that's desperation. Trump knows that if the economy gets crushed under high oil prices and high interest rates at the same time, it's game over for his presidency. So he's pushing Powell to cave. And Powell is sitting there stuck. If he raises rates to fight inflation, the economy breaks. If he cuts rates, inflation gets worse. He can't win either way. That kind of no-win situation for central banks is historically one of the best environments gold has ever had. So where does gold go from here? Let me give you two honest scenarios. In the short term, things could still get bumpy. The dollar is still elevated, rate cut hopes haven't recovered, and gold might keep bouncing around the $5,100 area. It could even dip down to test 5,000 again. That's the downside risk to keep in mind. But medium to long term, the picture looks very different. As long as the Strait of Hormuz stays blocked and oil stays above $100, a second inflation wave is coming. When that data hits, the market will suddenly realize the Fed has no good options. It can't tighten, it can't ease, it's just stuck. And at that moment, people won't be buying gold because of rate cuts. They'll be buying gold as insurance against stagflation. Gold's real breakout won't happen when the Fed finally cuts. It'll happen when the market figures out that nothing the Fed does actually matters anymore. That's when gold goes into full rally mode. My take. Here's where I stand. The dip we're seeing right now is an opportunity, not a disaster. The strong dollar is a paper tiger. It can't hold above 100 with a war burning through the treasury. Oil at $100 isn't gold's enemy, it's actually gold's best friend because it traps the Fed. And every time Trump screams at Powell to cut rates, that's just more confirmation that inflation is already out of control behind the scenes. My strategy is simple. Buy gradually on weakness, keep your position size manageable, and don't let the short-term noise shake you out of a long-term trade. What do you think? How high do you see gold going from here? Are you buying this dip or sitting on the sidelines? Let me know in the comments below. And if you found this useful, hit subscribe. I'll see you in the next one.